many out there might go, sorry, you're the founder? You're a co-founder? I thought it was Ted Farnsworth. I thought it was Mitch Lowe. Educate us.
Yeah. Well, it was a process. My co-founder and I, who were in love with the movie-going process, wanted to innovate on the model and started the company 2011. We raised a couple rounds of capital, but got to a place like many other entrepreneurs where we struggled. And so we had to raise some capital from some folks that we probably didn't know as well as we should have known. Ultimately, they were able to invest quite a bit of money in the company and take over the company. And it was just quite an experience. You have to watch the movie to get all the details.
And actually, the documentary does a good bait and switch in a way of allowing you to go with what your own bias is, that there's these two white co-founders. And in fact, there were two black co-founders who were ousted. And I'm interested now as to what you think the learning of the overall documentary is, because you say you struggled to make and get funding, like many. But do you think you were less likely to get funding because the fact that you were black?
A little bit, but I was very mindful in this documentary. I didn't want it to be a black versus white thing. All entrepreneurs struggle at some level raising capital. We were very fortunate. Our early investors were all white. So it really wasn't exactly that, but it's natural. I think one of the things we talk about is just the idea that sometimes we walk into the room raising capital, we're probably the first time that, at that time at least, the two black co-founders were walking in trying to innovate on an industry and trying to reimagine that industry. So that's hard by itself. It's also hard when you have the extra unfamiliarity of not having invested perhaps in folks that looked like us.
What's interesting, your other co-founder, Stacey Spikes, has gone back and bought the business afterwards, sort of raised its value, and he's brought it back and he's still innovating. But almost your premise was right. You just needed the movie theaters not to build their own subscriptions, which they went and did. But really the issue was about the price point here. What do you think about the price points of movie-going, of content consuming, of the way in which we see the landscape evolving?
Yeah, it felt like such an inevitable change to happen in the movie-going space. It's kind of why I came to LA to begin with 20 years ago, because I felt like some of this industry was slower to innovate. So we did feel like it was inevitable, and we felt like really the opportunity to be a Switzerland in the space was the sweet spot. Of course, there are opportunities for silos and for folks to be able to do it on their own. But we thought that the idea that there could be a community that tied it all together could be special. And then we were also going to innovate. We did innovate quite a bit more than a lot of the folks were individually. It's been a great lesson. I think it was a long time ago that we started that company, and where movies was probably more centric to our world. I've now moved on to focus on health and longevity and things that I'm much more passionate about. But Stacey's making a go at it. He's doing a great job. I think he's turned the company to be profitable, and he's figured out the pricing model that will work long term.
How much do you think there's still an issue of founders versus the money they raise? Who has the power when ultimately some of these contracts are written?
Yeah, I think it ebbs and flows. I mean, there are times where the founders and the entrepreneurs have significantly more leverage because there's way more capital than there is companies, and then sometimes the capital has a lot more control and power and say so. I think ultimately it's as a founder and an investor, I try not to think about that. I try not to take advantage of leverage in a way that's going to be unfair, because the tide is going to change at some point anyway. And I think we're seeing that play out now as the markets are starting to come back in terms of the private markets, and investors becoming more aggressive again. And now entrepreneurs and the leverage is starting to shift back and forth again.
You're focused on wellness, as you say, longevity, those founders out there, Hamet. And how are you seeing the ability for yourself to write checks? And how are you seeing things different from when you were out there trying to fundraise?
Yeah, I'd say there are a couple things. One is my model is slightly different. I have a venture studio and a fund. And so I like being on both sides of the table, so to speak. I like inventing and reimagining new businesses. And then I also like supporting entrepreneurs. And I support entrepreneurs that oftentimes may not get that opportunity. I'm looking for something different in many ways. I think it's changing a lot. I hope we're going to see some outcomes that start to prove that. But there's a tremendous amount of talent, and we're really looking at opening the aperture now to figure out how to get more talented entrepreneurs into the game, more talented operators, scientists, innovators. More perspectives on problems leads to better solutions to problems. So I'm excited about where we're going. There's still a long way to go, don't get me wrong, but I think we're in a good place.